Hello guys, Trades Action Plus here today. Today we're looking at the Spider Gold Trust. We're going to be looking at SLV. We're going to be looking at a couple of gold miner stocks. Just generally talk about a good buy-in point for these now. I know that gold has kind of ran up from this $2,000 level that we had around here, which is the yellow line on the chart that I have. And silver's also ran up too. I think the SLV has also run up about 30% from its basis. So we're just going to take a look at some decent buy-in spots here, and what I'm planning to do myself. And then we're going to look at how these metals, what these metals did in the last recession that we had. So we'll take a look at some of the other charts and just kind of see how good we go. So if we look at the GLD here, we'll basically see that it was trending for over the past few months. If you look at the past 4-month chart here, you'll see it's just been kind of chopping along this phase, but it's been slowly rising around the June time frame here, and you'll see most of that's probably due from the stimulus funding that's coming in, and also from all the fear that's been going on in the market from what's been happening overseas and in the United States. But you'll see here we did have a big run up around the end of June time frame. I think that's where they really started to run up the stimulus checks. The dollar is basically falling down. Looking at the break point here, this is about $2,000 gold. If we look at the monthly chart, let's take it all the way down on the 1 month. We'll see that this was previous resistance here, and this was a high made back in 2011. It looks like the August 2011 time frame. And then if we take it back to the 1-day chart, you'll see here that as soon as we tried to break the resistance, we immediately got forced back. And we went into this consolidation phase for about a few days, and then we had a huge run up to about 2050 gold, to $2,050. And since then, Friday we had a decent pullback. Let's look at the 1-day chart. So Friday we had a decent pullback. Same with the SLV. The SLV had a huge run up. Friday we had a decent pullback here. I still think there's room to pull back. Basically people doing profit taking, that have been probably buying gold in this time frame here, about the $1,200 range, and probably been waiting a very, very long time, and $2,000 was their mark. So what I'm doing, I'm actually adding a little bit to the GLD that I've had. I just started buying into it probably the last 7 to 8 months, and right at this point, I think I'm going to be adding a little bit here and there, just maybe a couple shares, just to kind of keep the trade going. Same with the SLV. I'm probably going to wait a little bit on the SLV to maybe get it pulled back to about the 2550 point. I think that'll probably be about a 10%. Probably not a 10%, but more like a 5 to 6% pullback from its peak. And I think that's kind of like a healthy point to maybe start buying. And what would really be nice if we started seeing maybe like a consolidation phase start to happen here. Let me just draw a couple lines here. Just to kind of get a little chop going sideways here to make another healthy run up, similar to what we did here. Similar to what we did here. You see these huge spikes. So, personally, I think the economics, things aren't getting better around the world. They're definitely not getting better in the United States. I know that the president's going to be passing an order for more stimulus checks, more funding going out, which only fuels the fire for gold, silver, and all other metals now in the market. Also, I think a decent play here is also some of the gold miner stocks, like the GDX, GDXJ. If we go back to the 1-month chart, just kind of zoom back for a little bit, you'll see in the last recession, right after we exited the recession in that huge spike in gold here, you'll basically see that, we had a run up to about $62 to $65 a share. on the GDX. So I think that can definitely happen here. I just think this run up is a little bit too fast, and similar to what we've had here. So I think we might see a little bit of pullback happening here, but I think the overall trend is up. If you look at the 9 and the 20 here, you'll basically see that we broke all those points, and we're actually trading over those lines. So that's a good sign. The RSI is a tad bit high here on the 1 month. Let's look at the 1-day chart. On the 1-day chart, it has been kind of pulling back a bit, but it still is kind of high. I think if it was down in the 49 to 50 point, I think that would be a decent time to buy. I just think it's gold is kind of overbought at this point. But who am I to say what'll happen here? I think they're going to pass some more stimulus checks. I think there's still a fear of the virus going around. I think that winter time's coming around soon. We're going to see a lot of more cases of the flu, that kind of stuff. So the good thing is about the gold miners, another thing to look at is, if we go to like the Morningstar site here, we look at the performance of some of the gold miners, like if we bring the GDX up, and you'll basically see the dividend that the GDX pays. Even though it's not super high, it's still about 20 cents a share, and the last NAV was about $27.77, and that's once a year. So the previous year it paid about 10 cents a share. I know it doesn't seem like much, but I don't believe that the GLD pays any type of a dividend. So if you're hanging out there waiting for years and years for gold to go up, or if gold's slowly pulling down, you won't really see anything here. So that's another reason why I like the miners. Plus, also, if gold is trending lower, if we see a pullback in gold itself, it doesn't mean that the miners won't be making money at this level here, making record profits. Even after gold is pulled down, you still might see some profits come in some of the miners, even a quarter after gold itself has started to pull itself back. So another chart I want to look at here was the Yahoo chart, the finance. And this is just kind of looking at a view on where gold is now. Like here we're sitting at about, so I tracked the GLD, and that's in the yellow color, SLVs in blue, the S&Ps in red. And you'll see here, gold is sitting at an all-time high here. We had this huge run in gold as of recent. But if you look back, and you also see silver here too. But if you look back to the recession era time, which I think total stimulus and borrowing in the recession era time period, I think we were at possibly $1.5 trillion, $2 trillion tops, and that's to bail out the banks. So I think, at this time, we're probably almost 3 or 4 times that amount. If you guys know the figures, please leave a comment down on the bottom. But I'm pretty much sure that around this time frame here in the recession, I think the government has only taken out $1.5 to $2 trillion to bail the banks out, to bail the auto stocks, help out the job market. And at this time here, we're just starting to see this happen here. So that's why I feel like we have a lot more to run here. And also, if you look at during the recession, you'll basically see, this huge downtrend in the S&P. This is about the time period that, crap started to hit the fan, and things started falling apart. And, silver and gold started to pick up. The prices started to pick up. But it really didn't start to spike up until the whole job market started. And as soon as the job market started coming back, the economy was booming. Silver just took off. But you had this very short period of time. This is probably a 2-month period of time here that you had to sell it, to take some profits. So, looking at the current chart, I think there's room to run, but I don't, once silver starts getting up to that $45, $50 an ounce point, I think at that time it's about time to start taking profits. So I myself will, if we see $3,000 gold, I think I'll start taking profits. I'll probably start to do it sooner, around I think the 2850 point, because I think 3,000 is probably waiting a little bit too long. I think once that point hits, we're basically going to get a lot of traders that are going to be selling off at that point, and we could see, you know, an easy 10 to 20% pullback from all the massive selling. So, but it could happen. It might not happen. I don't know. But we'll kind of see what's happened. We'll see what's going to happen. I just feel like this time around is a lot worse than what we had in the recession here. So that's why I feel like this has a lot more room to grow. So tell me what you think down in the comments. Please like my videos. It really helps. And thank you. Bye bye.